Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES poked below yesterday's low of 21.29 and found responsive buyers active at 26.5, and we saw a swift rejection of the prices below 21.29. So at this point, heading into the open, our overall bias continues to be neutral. The overnight bias is neutral as well, and the main resistance on the day is at 39.25 to 42.25, and then we also have Friday's high at 43.25. And we know that in order to get a breakout from this recent 5-day balance, we need to see a lot of broad market strength and sustained upside momentum. And without the sufficient strength and momentum, the market can continue to balance within the recent 5-day range. So on the long side, we know that we do have to see something significant in the market in order to initiate a long at any of these higher prices. Otherwise, the market can just continue to balance within the recent range. On the downside, we have support at 29 to 31. Now, that area of support really only works as long as we're not seeing excess weakness and we're not seeing sustained downside momentum. So when you're trading within a balanced market or within a trading range, you want to be pretty aware of the trade location and the entry and whether you're actually getting it at a good enough price. Because if the market is going to continue to chop, then you don't want to initiate a trade from poor trade location. So 29 to 31 is valid support, but keep in mind that it only works if we are seeing at least some level of strength in the market. Because if you're taking a long at 29 to 31, you have to question what the target's going to be. And if the target's going to be 39.25 to 42.25, then we do need to be seeing a lack of weakness and at least some level of strength on the advanced decline. And if we're seeing all-out weakness or downside momentum and the other markets are also breaking lower, then 29 to 31 may not hold either. So we do have to exercise caution right now, simply because the market is so balanced and it is so range bound. Below that, we have the overnight low at 26.5, and if we fail at initial support and the overnight low, then we can quite easily tag the open gap at 23 and the naked VPOC at 20.5, at which point we can start to see responsive buyers stepping back into the market. So 20.5, the 1675 to 1875 area, those are still spots where buyers can be active on first test, especially if the market is exhausted into it. And then the larger time frame support continues to be at 0775 to 1075. So right now we know that, again, the market is in a very balanced state. It's not going to remain in this state forever. Obviously, there will be a directional break one way or the other, but we don't know when that's going to happen. Today the market could technically continue balancing within a range, and then we get the break later on. We don't really have a whole lot going on the economic calendar this morning. We have the oil number out at 9:30 a.m. Central Time, but aside from that, there's not really any major scheduled catalyst. And we do have the ECB announcement tomorrow morning. So given that there's really no economic catalyst due today, unless we're seeing some extremes in the underlying internals and momentum situation, we may just continue to balance within the recent range, within the recent 5-day balance. So those are some of the things we're going to be looking out for off the open. Are we seeing any clear-cut directionality in the markets? Are we seeing any extreme skew on the NYC tick or on the advanced decline? And if things are pretty mediocre, then we know that the market is continuing to hold this very balanced state. And in that scenario, we just have to be very mindful of trade location, make sure we are entering the market at a good enough price where we can get some edge, and avoid the middle chop. So, like I said, even the 29.31 zone, only works out as long as we're seeing at least some level of strength, and we can shoot for a move up to 39.25 to 42.25. But if we're seeing all-out weakness, then even 29.31 may not hold. So, because our overnight bias and short-term bias is so neutral, it requires reading the market a bit more in real time and determining the state of the market on the day time frame to figure out whether there is some potential for at least short-term directionality, or are we just going to continue to chop in a range. So in that scenario, it's better to exercise caution and be a little bit more prudent and selective on the trades that we take. So those are the main thoughts heading into the open. Let's see if the buyers can hold ES above 29 to 31, and we'll take it from there.